Yo, what's happening, legends? Thank you guys so much for joining me in the chat. We got Chesm, Freewell, and all the legends in the house. I appreciate you guys being here. Another big day on the markets. Of course, guys, the way these shows are going is this week, Wednesday, we did a show. Bitcoin was at $62,000, dumping from 64. And today we do a show and Bitcoin's all the way back up at $64,200. Obviously, there's been a little bit of de-escalation or a little bit of quiet time, so to speak, around the war. So I think things are calming down a little bit before they potentially heat up again. So that's currently what we're looking at in the markets. Bitcoin is performing exceptionally well. Solana as well, a little bit of a slower mover, but Ethereum also pushing the range high. Today's going to be a quick compact show going through the market, looking for these opportunities, even on the lower time frame right now, as we see Bitcoin on the hourly printing out a bearish engulfing candle. So we have a lot to talk about, guys, with this recent move up, the fair value gaps in the market, all of that such. We're going to dive straight into it. What's up, cats? What's up, Banter Bubbly? Guys, first thing, just quick introduction. Welcome to Charts Are Dumb. If this is your first time here, please feel free to subscribe. Please feel free to follow us. Drop a like on the video, comment. Just help us kind of get the channel started and reach more eyes. There's a very, very slow process on YouTube of, kind of cracking into that algorithm, especially in such a saturated niche as trading. But that's what we do. That's what we do best. So that's our niche. I wish it was AI or I wish it was coding or whatever, but it's trading. That's what we're good at, and that's what I'm going to teach you guys today. If you haven't been, make sure you follow us on Instagram. I say us, but it's a one-man team. I don't know why I say us. It's just a habit, but follow me on Instagram. Right, I'm dropping constant content on there. I've dropped 3 videos this week, little short form clips on exactly some of the trading strategies that we're using, a lot of the stuff that we're going to be talking about on a daily basis, with free resources, with free full on descriptions and examples of that. So if I bring anything on the stream, you're more than likely going to see it appear within the Instagram profile as well. So you can kind of go back and really piece together what the strategy means for you and how it fits into your own strategy. What's up, Yaratech, or what's up, Peekaboo? I appreciate you guys being here. The latest video I dropped was obviously a volume growth with a trend growth, a absolutely critical indicator when trading. And just take a look at it. Let me know what you guys think. But yeah, obviously all that content's always going to be free as well. So awesome. Without wasting too much time, guys, let's get straight back into it. Obviously, we saw a little bit of an aggressive move returning to the market here as things started to calm down. We have created a lot of fair value gaps on the way up. We are now trading at that range high point that we previously set back on the 6th of July, so a little bit earlier this week, prior to the initial pullback post escalation between the Iran war and US. But right now, what we're looking at, guys, is that potential going into that weekend where things tend to calm down a little bit, right? Where the volume and the liquidity tends to slow down a little bit, we could be looking at these retracement points. And for me, guys, just looking at the hourly chart here, my first target would for sure be this inefficiency candle that's been developed right here, a fair value gap in the market, that massive squeeze towards the upside here. If we take out our fair value gap indicator right there and we draw it out, you can see how this will start to tie in here. Why is it not posting? Sorry, I got a 1.65 and we're on the hourly, so let me just... Oh no, now it's not working. Oh wait, auto threshold's on. Let me just reduce that. There we go. We got this big fair value gap here on the lower time frame, which I'd be looking to take out. There is obviously a huge buildup of liquidity inside this area as well. We tie in our volume range profile. We can see exactly where that concentrated liquidity is. For those of you guys who don't understand the volume range profile, it's where we take a set range within the market and we identify every single point in terms of price where money is starting to step into the market, where trades are being opened, where that volume is increasing, right? Your generic volume indicator, which comes on default on every single chart, as you guys know, is on a time-based scale, right? And that's the one that appears at the bottom of the screen, as you guys can see in this example here. That's on a time-based thing. So this is an hourly chart. That's how much volume developed at that hour. You'd probably associate that with the market thing, but it's really used to determine with the market timing, market opening, where the volume's starting to enter, if there's any patterns around that. But what we're seeing with that indicator is really from a momentum perspective. How is the volume progressing over the day, over the week, over the session? when we're looking at a volume profile, we're selecting a set range, which we can see obviously set here on Bitcoin at the beginning of this week, going into now the 10th of July. And we're identifying from that perspective where price is being traded the most. Where's the most concentrated volume building up on Bitcoin? And in this example here, if we just move our indicator system, it's coming in at around $62,700. I'd anticipate over the next couple of hours to the weekend going towards this area right here. Now, before we go into anything news driven, or we're not actually going to go into anything news driven, but before we go deep into the charts, the last time the war escalated was market close, right? So markets close obviously on Friday for the weekend. As you guys know, when we were back in February or March, whenever the case was, I remember this like yesterday because I'm in the country in the Middle East where the bombs started going off and we were being attacked at that period of time. So I remember it like it was yesterday. But what we're seeing in that regard is what ended up happening was the volatility as far as the war started happening when markets closed. I don't know if there's a pattern there, but it is something I'm just keeping in mind. It's starting to feel like this market or this war at least is very, very much market-based, right? We saw oil going up to 140, 120 on some charts. And then obviously we started to see a de-escalation. Now that oil's back at about $79 or previously $70, we're starting to see the escalation again, right? So it seems like there's a huge backing from a market standpoint. And I think arguably every war is the same in that regard. So I'm trading very lightly going into this weekend. I am looking for that volatility around the $63,000 region, which I'd like to refill, retest before attempting another break at that range high. And when we look at the POC, we could see that pullback coming all the way back into this order block area right there. That has been a point of control for Bitcoin for the last week at the very least, right? So we do have a pretty interesting level there post the fair value gap. So if you're looking to start trading into this level, just be careful about the liquidity grab that we may see below that region for sure. If you're looking at a scalp short right now, going into market open, which happens in about 3 minutes, a little bit risky. Obviously, with any market open, it does introduce a lot of volatility and a lot of uncertainty, right? It's like for your 1 minute time frame or whatnot. What you're seeing on the lower time frame here, for sure, there's nothing against looking for a little short here towards these lower points, right? If you're looking at the trades down to these zones, I'm looking for the pullback targets to get long because I believe in that risk to reward ratio over a short position at this point in time. But a short position is not uncalled for here, right? What we're currently seeing on the mid time frame here on the hourly is obviously a rejection from the range high, as you guys can see in that regard. And obviously at the same time, lower time frame perspective, we're seeing a little bit of an engulfing candle forming on the hourly chart as well. For those of you guys who don't know what an engulfing candle is, it's where a candle sweeps the liquidity of the candle before it and then closes above that candle. So fucking terrible, terrible explanation. But let's say we have a candle like this. That's the body right there. And then that's the wicks below it, right? If we have that coming in at the bottom of a range right there, and a new candle comes in, sweeps down below that liquidity and closes green above that zone right there, as you guys can see where this one closes right there, this candle then becomes that engulfing candle, which is a very, very bullish move or a very, very bearish move, depending on the direction or whether or not we're at a range high or a range low. Okay, as you guys can see here, I do have an indicator on which does establish all the engulfing candles on the hourly time frame. It highlights here for you in red or green, and typically what we'll see is a shorter time frame top. Because this is an hourly, it's not always as consistent, but when we see it coming into this zone right there, that led to a nice 1.5% correction. We had another bearish engulfing candle coming in here, which led to a massive 11% correction. All these green bullish engulfing candles led towards that next leg towards the upside. Previously as well, another one came in here, which led to a 4% correction here. What we're seeing here is a very, very similar structure happening here. The prior candle does happen to be a doji candle as well. For those of you guys who don't know, that's when a candle has a strong wick towards the upside, downside, and a very, very small bodily close, right? So I'll highlight this for you guys here using this candle pattern again. You just got to make sure that the body system is correct. Cool, we'll make it a purple color. Let's see if we can get this properly. Cool. So we have that engulfing candle, that doji candle right there, which represents indecision in the market, right? It is a confusion candle. The market is directionless at that point in time. And as you can see, what what generally happens is the first direction of that candle that's filled, it's a very, very loose rule, but the first direction of that candle that is filled is generally the direction that the market continues to move in from a directional standpoint, right? Over here, we are filling towards the downside, which does create another bearish momentum here. And we're purely looking at candle structures, right? We're not looking at anything else. We're looking at the body of the candle to really align with whether or not the market is going to move towards the upside or downside. You'll see consistently wherever we do have these doji candles right here in another example. Let me just clear out this POC drawing here. Right, the market falls towards the upside of this candle and continues in that direction. Same case over here. We look over here in this regard. We didn't fall towards the downside, fall towards the upside, which led to that direction there. Very, very similar across the board. It's obviously like any other trading strategy, not a super, super highly consistent strategy, but definitely worth paying attention to and adding as what's known as confluence. For those of you guys who don't know what confluence is, it is a big word, but it effectively means a supporting indicator to an overall strategy, right? You don't base your entire strategy, you don't make full financial decisions off one confluence, but if you have a series of things coming and tying in together that lead towards a certain direction or a certain strategy, that's what's known as confluence, right? We take volume as confluence. You can take an RSI as confluence. You can take a doji candle, an engulfing candle. Whatever the case may be, you're basically building up a collection of indications that support your thesis for which direction the market's going to go. Doji candles are not something that you can base an entire strategy off. Of course, they're indecision in a market, which in general, or, critically speaking, means that the market is in an indecisive place right now, right? So that just adds to that notion. It's not something to trade fully based off. Engulfing candles, on the other hand, I actually have one bot running on engulfing candles, which just performs unbelievably, right? With the right tweaks and the right system and the right parameters around that engulfing candle, it's actually insane how consistent this one simple strategy is. And more oftentimes than not, it actually ends up playing in a solid direction. Your bot's just got to be configured very, very precisely with regards to your risk profile, the certain tokens, the risk to reward ratio, and kind of analyzing or pre-analyzing what that take profit's going to be. So from a doji perspective, I'm not for building full strategies on it. Engulfing candles surprisingly carry a lot more weight than you'd think from any basic structural candle structure, sorry. Josh, is there an indicator similar to use in TradingView? Of course. Yes, of course. Going into TradingView right here, there's many indicators here. You just go candles, all candlestick patterns as an example right there, and you have shit tons, right? There's so many open source indicators with all these things, and it actually inspires a lot of the custom indicators that I build. These are all open source, so I can actually just copy the code directly. And then I kind of, as you can see, these highlight your bearish engulfings, your bullish engulfings, your doji candles as well. So you don't need to worry about that. Anything I show you guys here, I've made sure I've only built things that are available on TradingView, so you don't feel like, oh, you're dependent on the shows to make money or anything of that nature. And as I said in the beginning of the show, for those of you guys who weren't here or just tuned in now, we have launched an Instagram channel with my own AI character. As you guys can see there, that little fat-faced chubby kid. And yeah, he basically goes through all these strategies and teaches you guys every single thing that I talk about here. So if you're looking for more insights and anything like that, just follow the Instagram, completely free. I'm going to drop about 4 videos a week, 5 videos a week, and there's always going to be a new strategy or a new thought process in there that should help your trading to some degree. So make sure you're following Charts Are Dumb on Instagram. I'll launch on TikTok as well, but I think TikTok's a little bit more strict with trading content. Cool. So for me, guys, obviously where we're currently sitting in the market right now, going into market open with the current volatility we've seen with this range between $64,000 to $62,000 here set previously, I'd be careful looking for any shorts here, but from a long perspective, I am looking at this area here to start potentially analyzing how that market reacts and if we can go for that second attempt at the highs here. A little bit of a structure break from this previous point of view, retracement roughly about 50% back into the zone. We can look for some entry targets over there, looking for that next range break over there. And then we're targeting these higher points right here, going up to like 65, and potentially in a very bullish case scenario, we do have all these zones towards the upside here going as high as $74,000. Now, I do not think the bear market's over, guys. I don't think we've reached any structural bottom. I do not think we're even close. But, these relief things can come throughout the market. Yeah, Bitcoin is getting a little bit of excitement again. I think that there is still a lot of overhanging things that are affecting the market on a daily basis, and a little bit more than the market's kind of pricing in right now, right? When we do have such a big seller like MicroStrategy, which is actively selling at this point, bear it very little, they are still actively selling more than they're buying, or whatever the case may be, right? That kind of concept now, I don't think the market's really priced in as much. And the lower Bitcoin goes, of course, the more scary that becomes. So we're in a very volatile place right now. We also have to consider the potential escalations around the war. Although actually that marked the bottom of the last bear market. So I'd be very careful getting into any overly comfort position. I'm personally not making any purchases in the market. Everything I'm doing right now is really just trading and having some fun. That short looks like a good idea, to be honest. That area historically rejects, plus the doji looks good. It looks good, right? There's no, we're not overthinking these strategies at all. It is a big resistance point, and you're correct in stating that it does exist a lot further back than just this current zone right there. And we've seen Bitcoin statistically from this point reject more often than not. So if we're just basing our trade strategies off a statistical region there, most of the time Bitcoin does dump from these regions, and we're not looking to dump it all the way back down to sub 58 or $60,000. But from a skull perspective, given the liquidity gap formed right there, the fair value gap in the market, the inefficiency, if you will, and the order block in this region, the POC, the sweep of the liquidity higher and the previous liquidity higher, we definitely have something around that $63,000, and just timing that with going into the weekend where we will generally see or potentially see a little bit of a slowdown in the market when the volume starts to step out and everything of that nature. It's not a terrible trade. It's not one that I'm taking, right? I'm trading with you guys live, and I'm looking for these opportunities with you live. This is just a trade opportunity. I'm more interested in that pullback zone to look for a later entry than to kind of take that risk right now because of the uncertainty in Bitcoin, because of the volatility we've seen over the last couple of days to the last week. It's been a very, very difficult thing to time, right? But very similar to these liquidity gaps and fair value gaps that form in the market, it is an extremely, extremely consistent target for looking for pullbacks in the market, right? So what we see there is an extremely attractive point for Bitcoin to pull down. I just think timing this trade right now is a little bit difficult, a little bit risky, but have fun. Yeah, so the trades, guys, for those of you guys who aren't aware, sorry, the last day or two since I did the last show I did a show on Wednesday night. We took a short position on Solana, but the system wasn't working and sharing it with Twitter, so I just closed that trade for like literally $2 profit or something stupid at break even. I didn't get the chance to share it, but we are doing a $100 challenge, I promise you. This first week is just a little bit tricky with all the business stuff that's going on, guys. For those of you guys who aren't aware, just to kind of bring you a little bit into the private life of Josh the Trader, I have recently left my employment, my first my 4-year-long employment, to kind of venture out to myself. I've obviously found a lot of success in trading. The employment was a very, very exciting opportunity, very, very fun time in my life, which I'm very happy about. But it was time to kind of take a bet on myself. I definitely didn't need the money anymore from the job, and just kind of spend most of my time trading and building a new business and stuff like that. So this first couple of weeks has been pretty insane. There's a lot of shit going on, building teams and stuff like that, things that I'm not privy to or don't have a lot of experience in. So just bear with me for this first couple of things. There might be a little bit of inconsistency in terms of giving you guys 3 trades a day and what the case would be. But we are grinding an account up from $100. I have done it many times before, and I will do it again with you guys live and publicly. For those of you guys who want to take part in it, you don't have to open up an account or support me in any single way. But you do have to follow this account on Twitter right here. So go to Charts Are Dumb on Twitter. And effectively, whenever I take a trade, guys, I will share the trade directly with you guys through the system, which automatically, any trade I take, it sends directly to Twitter within a second. So you get that perfect opportunity. Fen, I'm not right now. We do have a team, or we have already we already built a team, but I'll keep that in mind if anything happens. A completely different industry to crypto. So I don't know how much it will interest anyone. But I'll keep you guys up to date with that. For those of you guys who kind of are into the more community side of charts are done. I'll keep you guys up to date with everything that happens. But it's very, very exciting. All trades are posted on Charts Are Dumb on Twitter, and then obviously educational content on Instagram. And I'm thinking about bringing that educational content to Twitter as well. I just don't know how it will work. Okay, awesome. Up next, guys, big topic of conversation is Ethereum, because it's outperforming Solana again. Very, very similar case scenario. Obviously, for Ethereum, we're looking for these lower downside targets here towards 1,680. We did discuss the relative strength we were seeing at this point here. Obviously, that came in a little bit of a shock as things started to escalate around the Donald Trump war there. That kind of flushed out any position that was open in that zone. It happens. It's part of the game. You get news that drives markets many a time. You just got to kind of grin and bear it on those ones. But obviously, Ethereum's seen a hull of a recovery in this zone here, kind of forming out this little cup and handle formation, or cup formation. Not yet a cup and handle. I'm kind of being a little bit premature here. But what we'd look for Ethereum, very, very similar to Bitcoin. Of course, we have a massive inefficiency candle formed here, a massive fair value gap zone. Another big retracement target I'd be looking at in these areas right there. Higher time frame, that is a range low retracement. As you guys can see, I'll keep this chart as clean as I possibly can. Just bear with me. Close out the Twitter thing here. Okay, cool. So what we have here is this little support zone here. It's not necessarily the range low, but a big level of support on Ethereum. We've now flushed out that region. We filled out this liquidity trap formed on the 6th of July for Ethereum, and now kind of created this little inefficiency break in the market. I'm going to teach you guys a strategy now that is one of the most consistent strategies I've ever traded in my entire life. Okay, and it's called inefficiency breaks, right? It's where you have a break of structure in the market with a highly volumetric candle, which basically leaves a massive gap in said liquidity and is more often than not, on a very, very consistent basis, filled prior to any move in the same direction. Okay, sounds like an absolute mess of a topic of conversation here, but we're going to get into it, don't you worry. Effectively, what happens, I'm going to try and draw it out for you guys here. If we have a market ranging like this, right? This is your little range. That's your support level towards the downside here, okay? As you guys can see, this little level right there. Effectively, what ends up happening in not all cases, but maybe about 10 to 20% of all range breakouts is we have what's known as an inefficiency candle, right? It's where we have one massive volumetric full body candle pushed towards the downside here, right? We don't have this little break towards the downside, slow retest, and then continuation. We have one candle that effectively sweeps all this liquidity right here and kind of squeezes towards the downside. If that continues on this basis, then this region right here, and I'll just clear out this for you, this region right here becomes a massive magnet for price action, right? Now, there's few cases, right? There's obviously, if the chain got hacked, you're not likely to see anything, or they lost all their money, or they're closing down, or there's a massive war, or whatever the case may be. There's a few factors, obviously, where this doesn't work out. But effectively, with this massive volumetric candle that kicks in here, we have what's known as an inefficiency in the market. It's known as an inefficiency candle and creates a huge amount of demand in that area. All you do, you don't look to long this, or you don't look to do any of that. You simply just wait for the retest within that zone. We understand from this price action that there's a huge amount of sell pressure on the asset, but with that gap in liquidity, to sustain that further move towards the downside, we'd like to see this little retracement back into the zone, and then we look for a short position for that continuation. Okay? Now, there's a little bit of volatility coming in here on the lower time frame, but effectively, we're seeing something very, very similar here, right? A little bit structurally different, but because we have this resistance point that came in on the lower time frame, a big volumetric candle with no retest on the underside here creates that fair value gap for one, but also that gap or that inefficiency in the market. What we do on Ethereum is very, very simple. For a first target perspective, I'm simply looking for a reaction at this zone. Now, Ethereum's got a lot of overhanging things with it, right? We have these big gaps towards the downside here, a lot of unfilled liquidity. This is a big volume profile area if you time it out correctly. As you guys know, when we look at these structural breaks, as we've seen on the high over here, this liquidity that's obviously now being swept, we kind of draw this little area. We can kind of tie in from this previous range where that major volume profile point of concentration is, right? Point of control, sorry. This yellow point here, guys, is the highest point of control. It's the price point in which Ethereum is handling the most trade volume, right? Try keep it as simple as I possibly can. And what I'm looking for here is a retracement into the zone, right? We have a big order block on this side, big fair value gap. That's the big position. This right here is a small position. We're looking for a little bit of liquidity fill here, a little bit of a trade, so to speak. And we're just looking to push this thing back into the higher time frame range high, which comes in at this point right there. Right, so very, very simple 5%. The higher time frame trade is looking for the full on the strength around $1,700 to about $1,660. That's the zone I'm looking for on Ethereum. Guys, please, my charts get a little bit messy sometimes with all these indicators. I can see it, but I don't know if you guys can see it. So just tell me, Josh, clean that fucking thing up. I can't see a fucking thing, please. Swear, go nuts, right? The chat belongs to you. And excuse my language because that was a bit bad. But yeah, effectively, that's what we're looking for there on that lower time frame perspective. I'd like to see a little retracement into here over the weekend, followed by a potential move towards these range high points over here at about 1,850. There we can look at this little pullback into this zone right here, right? Obviously, if we don't hold that and that trade goes south, which is always a potential with any trade, nothing's 100% guarantee. We're looking for the retracement point. We're looking to sweep out this level here prior to any strength toward the upside. We obviously manage our risk. Let's say we're looking for a 5% return. We take a 2% risk, for example. We cut out that 2% early. We ride the wave down to this point over here where we look for a stronger entry with a better risk to reward ratio, right? So we'll make our money back in a step-by-step basis. We take a trade. That's our execution point. If anything goes wrong on that basis and we make any mistakes on that, or the trade just goes south in general, we reevaluate the chart and we have plan B, right? I wouldn't even look at it as plan B. I'll just look for the next strategy, right? The next opportunity. And that obviously comes in this higher point here. And that's a slightly higher conviction-based trade here. A decent size retracement back into this area, about 50% after the structural change. Looking for this area right here at about $1,660 to $1,700. Can you predict an efficiency? Well, look, here's another example of an efficiency, right? I'll give you as many as I possibly can. Some of them have very, very different cases or things that happen that create them. But here's another example, right? So we'll clear out pretty much everything we can here. And we have this resistance point right here. Okay. That resistance point comes in right there. We see Ethereum kind of sweep this level, very aggressive move towards the downside. We wait for that to be filled, which it always is. And that became the retest point, right? Low 5% move as well, nothing too big. Decent risk to reward, decent take profit strategy. You would have been okay on this one. That obviously was a point of control as well. And followed by the red engulfing candle that appeared straight after. That would have been your exit opportunity there. Generally speaking, these are fantastic retracement points. I'll see how many I can find for you. Let's go on to a slightly lower time frame because they should show up a little bit more frequently. Let's see. See, these break of structures right there, where we see that, we have a little slow growth, right? No real inefficiency there. A little bit of a fair value gap formed on the lower time frame here, which will inevitably get filled over time. We'll wait patiently for that, but I'm trying to find you some really, really good examples here. Here's another decent one. Not the best example, but enough for you to kind of understand what I'm referring to. Massive structural break right there. We see that huge volumetric candle coming in. The slow grind up to fill that candle. That's the resistance point set out right there. And then we see that pull back towards the downside. Any break of resistance or support with a massive volumetric candle is almost always filled. Okay? Not always, but very, very many a time. We look over here, resistance point, breaks above that structure, comes back in. Oh, sorry, we already looked at that one. That's not fair. That's not fair. Hold on, I went to a lower time frame. I'll try to see how many I can find for you here. There's obviously, we don't have the historical context, what happened at that point in time. I'd look at this example as well. Range high, massive break of structure, comes back in to retest that point prior to making a new high right there. This one you probably wouldn't take because of that major engulfing candle right there. But I hope you guys get the gist of that strategy. It is very, very important, and it's generated a lot of returns. Specifically on a lower time frame, it tends to work a lot better for me personally, and that being the 1 hour and down. It's not a strategy that I would follow on a multi-day hold, right? Or a multi-week hold. Your strategies vary extremely as the time frame changes, right? The same strategy with regards to if you're doing an engulfing candle and you're trading on the 30-minute, you don't follow that same strategy when you go to a daily chart or anything of that nature, right? They change quite dramatically, and a higher time frame, generally speaking, requires a lot more confluence. And if you don't know what confluence is, go back to the beginning of the show where I explain how you use supporting indicators to validate a certain strategy. Higher time frame, generally speaking, requires a lot more confluence, right? You want to see oversold conditions, you want to see liquidity shifts, you want to see changes. Many a time you want to see narrative also kind of tie into those factors. So you have to learn to separate your lower time frame strategies with your higher time frame strategies. Speaking of which, if you go to the Instagram, the first trade reel I posted over here, which did really well for a brand new account, about 4,500 views right there. This strategy right here, where we draw out the range, we highlight the range profile, we wait for the break instruction, return to the POC right there. Fantastic, fantastic short time frame strategy, right? Go watch the Instagram video, go like it, go follow the page. It's a great strategy to tie into anything you're currently working with. Anything I teach you guys is not to replace your strategy, but to go and say, okay, cool. If my strategy is giving me a 50%, what if I tied in this, right? And I try to kind of rework and find a better entry execution opportunity. What would that do to my win rate? Would it go up to 55%? Would it go up to 60%? Fantastic, right? Amazing. And that's all the goal is, right? You never want to hear anything that any YouTuber or any content creator or any teacher like myself says and go, okay, fuck what I've been doing for the last year. You really want to learn how to slowly adjust your own strategy to make things work or really understand. And sometimes it just doesn't work for you, right? Sometimes it just doesn't align. It's not about forcing yourself into that position to go, well, if this guy says it works, then it has to work, right? Never, ever, ever, ever do that. If you're a trend trader, you try find ways that this kind of ties in and helps, because trends, although very, very beginner based, they're very, very simple. There's a lot of real deep knowledge to understand when it comes to a trend that's not as simple as the strategy itself. There's a lot of fundamentals there. There's a lot of validity there in terms of a trading strategy, right? And tying in some of these confluence, tying in the engulfing candle that you learned today, tying in the inefficiency candle, the doji candle. These things are just helping you build out the strategy that just helps your win rate just go a little bit more consistent, right? On the next show, when we do another show, we'll talk about like risk profile and risk management. That's like the number one thing, but then your strategy is a very, very tight second. Okay, cool. Okay, so that's that. Obviously, over the week, we've talked about the Solana USDC chart, USDT, Solana USDC. Solana is a very, very big dog right now in terms of its recent performance, in terms of where it's sitting at from a chart perspective. It's very difficult to be bearish Solana right now. Lower time frame, sure, we could see some dips back into the $75 region. We could definitely prepare for something like that. But what we're looking at Solana here, another inefficiency break right there, comes back in, is retraced and continues towards the upside, just side note. But what we're seeing on Solana is a massive level reclaim, okay? This one's a little bit different because what we've been facing on Solana has been quite the chart, right? So if we look at Solana from we can even go higher time frame here to a 1 week should work. Okay, we look at Solana within these two ranges here of sub $80 and going into this lower point here of about $40. This is a massive, massive liquidity gap, right? Solana, generally speaking, has not found a lot of support or resistance within this zone. Not generally speaking, historically speaking, right? We look at these areas right there. That's a massive, very, very dangerous zone for Solana. Anytime that it's historically entered these areas, it has seen through the entire liquidity gap, and we've seen towards the underside regions right there, or the upside right there. So it's amazing, amazing trading zone. What we're seeing on Solana now, however, is a very, very critical reclaim, right? We've not seen a sweep below the $80 zone and then reclaim in it. Although we've only traded towards the underside one time historically, we've not seen something like that. And now what we're doing on a daily time frame looks fantastic, but on a weekly time frame is exceptionally dangerous, right? Effectively, we filled out this liquidity trap that appeared back in January, right, with that initial market collapse that we saw in the year open. Then we obviously came back in and we're now filled out that liquidity trap, and we're looking to reclaim the $80 zone. That is a critical trading area. Even from an investment perspective, which I'm not really interested in doing, is a critical zone for Solana to hold. We're watching closely on this weekly open because that's going to create a lot of direction in the market, a lot of confirmation, right? What we saw in the previously weekly close was not a solid reaction, as Solana was not accepted back above $80. We saw the initial push and an immediate sell-off closing below $78, which is not fantastic. It's not the best thing to see, but now on this week, making a second attempt to break and reclaim $80. It is a massive level, right? Even if you're not able to catch any bottoms on the market, if you're just simply looking at that as a trading opportunity there at this higher time frame perspective, tying in that inefficiency candle, and you're looking to ride this back up to 120 for a little mid-year recovery in the market as Bitcoin goes to 75 or whatever the case may be on Ethereum, etc. That's the trade that you're looking for, right? It's an amazing trade, but you have to be extremely careful. I just wanted to dive into this because of what we have, what I've been posting on Twitter around Solana. Because Solana does look fantastic, but we need to see a lot more strength above the $80 region as it relates to a macro higher time frame zone. Guys, thank you so much for joining me here today. As I said, guys, the live trading is all good and well. We're doing live trading. We're doing, the trades are just moving off live stream, not exclusively off live stream, but initially we were doing live trading on stream and then kind of limiting ourselves to that because we didn't have a group or anything. We're moving that to Twitter as well. So any trade I take will be shared on Charts.com on a lower time frame basis. I'm spending an hour to 2 hours a day kind of hunting down trades scattered throughout the day. So make sure you're paying attention to that. I appreciate every single one of you guys. Remember, the shows are live Monday, Wednesday, Friday at market open, just 15 minutes prior, 9:15 EST, 5:15 Dubai Standard Time. And I appreciate you guys being here so much. I hope you enjoyed the show. Make sure to like, comment, make sure you're subscribed if you're not, and have an absolutely fantastic weekend, guys. Much love.